Hey, listen, guys, I'm excited to be here. I'm excited to be giving you this information. So today we're going to briefly talk about the interest rates and really what the perception is and how to overcome that perception. Okay. So first off, Peter, Heroes Real Estate Group. You guys know who I am. Let's go. So if you look at the screen real quick, you look at the traditional historical ups and downs of the actual interest rates over the course of the last couple of years. And if you look all the way to the right where we are on the 2022 side, you look that they're on the uptrend, right? If you look a little bit to the left of that, you see about a year and a half ago, how the rates were like at an all-time low. And that's what most of you are basing your information from in terms of like, are the interest rates good or bad? Now, let me tell you, some of the experts are saying that interest rates over the course of the next 2 years should come back down and normalize at acceptable levels, whatever the hell that means, right? I mean, that, in my opinion, that might mean between 4.5% and 5.5% in about 2 years. But you know what? Who knows? It all comes down to what inflation does, right? But let's just say that's true. Some of you that are here right now that are looking to buy a house or are hesitant, or even you want to sell your house, but then you're looking at buying at a high rate and you just don't want to do that, right? You want to hold on to that 3-4% mortgage that you currently have right now. Well, what if I told you there's a way to do that, all right? So if you look at the 2-1 buy down, or you look into the 2-1 buy down program, simply what that means, and I'm going to show you a video here in a minute, simply what that means is that you get to lower your interest rate for the first 2 years of the actual mortgage. So as a matter of fact, let me just show you. Matter of fact, come here. If you look here, I'm going to show you this video right here, and let's get to it, all right? So, all right, now a 2-1 buy down mortgage is basically just a loan option that gives you opportunity to lower your mortgage payment, right? The reason it exists is because it actually drops your interest rate on the first year by 2% from the standard rate, right? So the second year, it takes that standard rate and it drops it by 1%. Now, in the third year, it simply reverts back to the standard payment or the standard rate, right? Now, how it works is a fee is collected as a seller concession in order for you to participate in this program. Now, it's really quite simple on how beneficial this program can be, not just for you as a buyer, but as a seller. Imagine you want to sell your house, but you don't want to go get a 6%, 7% interest rate. Then you can use this program as well to kind of kickstart that new journey. And as a buyer, you get to save thousands upon thousands of dollars on the mortgage in the first 2 years. And in 2 years, year and a half, if the rates are back down to acceptable levels, then you know what? Refinance. Worst case scenario, in 2 years, the rates are at 7% still, and you'll be at just shy of 7, or you'll be back down to where you would have been there anyway. So it kind of takes that train of thought of I'm going to wait until the rates go back to normal, and it kind of pushes us aside a little bit, and it makes you feel more comfortable with buying a property now. So if you have any questions or comments, concerns, anything at all, hey, listen, I'm not a mortgage broker. I'm not a mortgage guy. I'm a real estate guy, but I have a lot of good friends that are in the mortgage space that I would be more than happy to refer to. So give me a call, shoot me a text, 407-308-4518. Send me an email, peter@flreagent.com, and I'll be happy to connect you with one of those mortgage officers that can answer any and all questions that you have regarding this program. All right? Until next time, we'll talk soon. Bye.